In 2 days, in March 2021, a man lost $20 billion. Not a fund, not an institution, one man. And for a while, no one outside a handful of bank trading desks even knew his name. His name is Bill Hwang. Hwang started as a protege of Julian Robertson at Tiger Management, one of the most respected hedge funds in history. He launched Tiger Asia in 2001. By 2012, the fund was managing $10 billion. Then came the insider trading charges. Tiger Asia admitted guilt, paid $60 million in fines, and shut down. Most people don't get a second act after that. Hwang got one. He converted Tiger Asia's assets into a family office and named it Archegos Capital Management. Family offices don't register as investment advisors. They don't file the same disclosures. They operate in a different light than a hedge fund, which meant Archegos could operate in near total darkness. That mattered, because what Hwang built in that darkness was extraordinary. He didn't buy stocks. He bought exposure to stocks through something called total return swaps. A bank would hold the actual shares. Hwang would pay fees and collect the gains, or absorb the losses. No direct ownership, no SEC filings, no 13F disclosures showing the world his positions. By early 2021, he had swaps spread across at least 8 prime brokers: Nomura, Credit Suisse, Goldman Sachs, Morgan Stanley, Deutsche Bank. Each one saw only their slice. None of them saw the full picture. That picture was massive. His positions included huge concentrations in ViacomCBS, Discovery, and a cluster of Chinese tech and education stocks: GSX Tech Edu, Iqiyi, Baidu. His total exposure was estimated somewhere between $50 and $100 billion. He had started with roughly $200 million from the Tiger Asia wind down. He had leveraged it 30 times over. For a while, it worked brilliantly. His net worth climbed past $30 billion. Forbes called him the greatest trader you'd never heard of. Then ViacomCBS decided to do a stock offering. On March 22, 2021, ViacomCBS announced a share sale to capitalize on its recent run-up. The price had more than doubled since the start of the year. The offering made sense for the company. For Hwang, it was the first crack. Institutional investors who'd bought into the rally now had an exit. They sold. The stock dropped from $100 to the mid-40s within a week. When ViacomCBS fell, his swaps on it triggered margin calls. When his brokers went to sell, the selling pushed the price further. When the price fell further, other positions started getting margin calls. Friday, March 26, 2021. The banks couldn't wait anymore. Goldman Sachs executed block trades in the pre-market, $6.6 billion worth of positions. Shares in ViacomCBS, Discovery, Farfetch, Iqiyi, and GSX dumped into the market before most retail investors had finished their first cup of coffee. Morgan Stanley followed with $8 billion more. By the time markets opened, the floor had already fallen out. That single day saw some of the largest block trades in Wall Street history. All of it. Archegos positions being force liquidated. In 48 hours, Hwang's estimated net worth went from around $20 billion to somewhere near zero. The banks were not fine either. Credit Suisse was slow to liquidate. They waited, hoping prices would stabilize. They lost $5.5 billion. It contributed directly to the unraveling of Credit Suisse over the next 2 years. Nomura lost $2.9 billion. Deutsche Bank got out faster and limited their damage. Goldman and Morgan Stanley moved first and largely escaped. The banks that trusted Hwang the most and waited paid the most for it. In 2022, Hwang was indicted on 11 counts of fraud, racketeering, and market manipulation. Prosecutors alleged that he and his colleagues had deliberately manipulated the prices of his own holdings, then misled banks about the nature of his positions. In July 2024, he was convicted on 10 of those counts. He faces up to 20 years. $20 billion. 2 days. 8 prime brokers who each thought they had a handle on the risk. They didn't. Nobody did. That's the thing about leverage. It doesn't announce itself. It just waits until the worst possible moment, and then it collects. Bill Hwang knew that better than most. He just thought the rules didn't apply to him. If this story hit different, stick around. There are plenty more where this came from.